Okay, Jeff, is that you?
Yep, that's me.
Okay, hi everyone. So sorry for the delay. We had some technical difficulties. Jeff and Tony were able to figure it out. So we're going to get started right away. Jeff, Tony has the presentation pulled up. So let me just do a quick intro and then I'll hand it right over to you.
Thank you.
So thanks for everyone for being here. Happy fall. Today's webinar, Jeff Lipes, who is the president of our credit union service organization, is going to discuss the three big M's: millennials, membership, and mortgages. And then he'll also talk to you a little bit about how your membership through MSIC and the TRIM program that we rolled out can help your credit union start attracting new members, millennials, and originating more loans. Just a quick note, if you have any questions during the presentation, feel free to interrupt via the chat box or the Q&A, and I can interrupt Jeff on your behalf, or you can raise your hand and I can unmute you. And with that, I'm going to hand it right over to Jeff. And again, thanks everyone for your patience.
Thanks, Eric. I appreciate that. So sorry for the delay. It's always the case when you're the speaker and something happens like that. So apologize. So this presentation, the three big M's. We're going to start with millennials. Millennials represent 72 million of our population today. And I just want to make sure everybody knows that the millennial age group right now is the group between 28 and 43. And that is really the significant amount of the largest portion of people that are out there that would be looking to either be a first-time home buyer or to upgrade and buy a new home. So it's the greatest potential for where we can, as credit unions, try to go after and attract new members. So millennials are where we want to focus. Let's go to the second slide. And of the 72 million, we all know that they're not all looking for a home right now, but they have represented, last year, they represented 43% of all the home buyers in America. So with that statistic, close to 50%, we know that if we want to attract millennials, that's where our focus has to be. This has to be where the greatest share of that of market is. So that's where the potential buyers are. Let's go to the next slide. So what are millennials looking for? What attracts them to any institution? And the first one, and probably the most important, is that they all have a community-oriented value. And a credit union is perfect for that. Credit unions have the same values as millennials. We just have to make sure that story gets out there. Millennials prioritize organizations like credit unions that are socially responsible. They all know that the logic is that banks are out there trying to make a profit, independent mortgage bankers trying to make a profit, but the credit union tends to be more socially responsible, and that meets the core of one of their values. Well, second thing that they're looking for is they're looking for tech-savvy solutions. We all know that they don't like to pick up the phone and talk as often as the baby boomers. They have what we would call they want what's called digital convenience. So they want to be able to deal with you anytime, anywhere, and do it with technology more than with face-to-face or on the phone. That doesn't mean they won't do the other ones, but that's what they want as their path of least resistance. So that includes things like making sure that your organization is paperless, that you can people can e-sign documents, that your online portals are strong and easy with which to use. So that helps address the tech savviness of the millennial. We go to the next slide. They also have an appeal for better rates and terms. And one of the advantages that credit unions have is they have the ability to do more portfolio product than what independent mortgage bankers or some traditional banks want to do. So this is where you can really shine when you're competing against the marketplace of a bank or an independent mortgage banker. They also want personalized service. We know that credit unions are member focused, so personalized service is what credit unions have made their name on. So it fits right in line with exactly what a millennial is looking for. Now let's go to the next slide and talk about what are the three key influencers for millennials in reference to buying a home or getting a mortgage. And the first one is really income and employment. They want to make sure that they're at a stage in their life where they have stable employment and stable income. Earlier on, they might have been checking and seeing what type of profession they wanted to be in, but now in that age group of the 28 to 43 range, they're pretty much entering the stable point of their income and employment lives. The second thing, they're also entering what I would call the marriage and the family part of their lives. We do know that millennials tended to get married a little older than the baby boomers. So now that they've entered that age group where they are getting married and then they're starting to have a family, and once they have a family, home ownership moves way up on their priority list to make sure that they're bringing up their children in a home that they like and in an area that they're comfortable with. And the last item of the key influencer is the market conditions. They want to make sure that how are interest rates doing, what are home prices, but probably most important right in this market is the availability of inventory. And we all know that inventory is down, that homes have been receiving multiple offers historically over the last couple of years, and people have been bidding up and paying more for homes. So it's kept a few of them on the sidelines, but our hope and anticipation is that as rates drop, that will open up a little bit more of the inventory as people are able to move up homes and things along that nature. Now let's go to membership. Believe it or not, 130 million people across the United States are members of credit unions. That represents 35% of the U.S. population. I was somewhat surprised to see that over the last 10 years, the actual credit union membership has grown by approximately 30 million members. They went from 96 million in 2013 to 130 million in 2023. Now, that's a 3% growth over that 10-year period. So I guess my question to everybody on this WebEx would be, have you seen your membership grow 3% a year over the last 10 years? And if not, why not? And if so, congratulations, you're doing it. You're doing very well. But if it has not, then why has it not grown at your institution? So now we go to the next one in reference to membership. And although there's a 130 million and a 35% increase in the number of people who've joined credit unions, there's been a 30% decline in the number of credit unions across the United States. So it's really declined significantly. So it went from, in 2013, about 6,800 credit unions down to around 4,600 credit unions last year. So that represents the 30% decline. And why has that occurred? Well, larger, more technologically advanced credit unions are absorbing smaller ones through mergers. So for those of you on the call, if you're not at a large institution, then you have to make sure you're acting and thinking like that in order with which to stay independent. You have to be able to offer competitive services with modern technology, and if you can't, then you're going to struggle, to remain independent. So let's go to the next slide, which is threats to credit unions in general. The number one threat is increased competition from big banks and the fintech companies. You know, a rocket mortgage type of analogy would be a fintech company. You know, they offer a wide array of services, and they're really more advanced on their technology and give a broader accessibility. So you want to make sure that at your institution, in order to attract the millennials, you have really robust online platforms, and you have you know, what the tech savvy millennials are looking for. Next item, they're looking for limited digital services. Credit unions, especially small ones, they need to offer seamless online and mobile banking experiences. You may offer online or mobile, but is it seamless? Is it one click or is it 10 clicks? So you have to make sure that the millennials like the ease and the convenience. So you want to make sure that you're improving your limited digital services. Next slide. Who the current users? We have the branch network limitations. Those are a threat to a credit union. Unlike the big banks, credit unions, you know, you typically have smaller branches, smaller ATM network, and things along that nature. So it's a threat to the credit union. Perception of limited access. Credit unions are often seen as exclusive with membership restrictions. So you have to overcome the thought out there that somebody can't join that credit union because they don't work at a certain area now that access has been improved. Lack of awareness. Despite having competitive rates and community focus, some of the public out there is unaware of the benefits that you can provide. So you really have to market and outreach to the community as a whole with which to stay current. The next slide, final three threats to the credit union: regulatory and operational challenges. What you'll see here is in order to stay compliant with everything, credit unions tend to have their resources really strained with which to make sure that they're able to, you know, stay in compliance. And if you can streamline and outsource and do things along that nature, you can use your resources with which to market your credit union rather than to just focus on straining everybody with the compliance. Aging membership, we all know that's a big threat to credit unions. Most of the population is, you know, baby boomers are higher, and therefore it's aging out. So you have to make sure you're able to do something with which to attract the younger crowd, and millennials, as we say, are the area that we think you should be focusing on. And lastly, economic pressure. We all know that rising interest rates, you know, inflation, things along that nature cause issues for people with which to buy. We also know that you know, the credit unions, you know, want to get a strong savings deposits and be able to lend more money out in their marketplace. So sometimes that's very difficult to do to compete against some of the bigger banks. So now let's turn to the last topic, which is the mortgages. We said, you know, millennials, membership, and mortgages. Well, historically, credit unions' volume is heavily dependent on refinance business as they do not actively market new home purchase business. That's historically been the credit union's model. They do very well when the interest rates drop and their members want to refinance, but they don't do as well when it's a higher interest rate purchase mortgage business. Or why is that? Well, one of the first reasons is typically the compensation to a mortgage loan originators are lower or different at credit unions. Credit unions, some of them will give a salary and maybe a small commission, whereas the independent mortgage bankers or the bankers tend to find people that are more sales oriented, and they're willing to take a little bit of risk and take a very small salary and a larger commission share where they can make a lot more money, and therefore they don't tend to end up at the credit union. Second, realtors have a perception that credit unions do not have the same sense of urgency as the independent mortgage bankers or the banks. They just think, all right, the credit union does it on their own time frame and doesn't pay as much attention to the dates that are very important with commitment dates and closing dates and things along that nature. So there's a tendency to say, all right, let's push the mortgage volume to the banks or the independent mortgage bankers. Thirdly, there's also the perception that credit union employees just work normal hours, and that when realtors and home buyers need assistance after hours, that they're not going to be able to get hold of somebody at a credit union, whereas they can when they're with an independent mortgage banker or bank. So let's talk about the next page. Do you have a robust mortgage website where everything can be done online? So obviously that's the key to millennials is where they can go on and they can see what their rates are and they can see that they can apply and they can move forward without ever having to pick up the phone and talk to anyone. So, my questions to everybody here is is your system paperless? Do you allow e-signatures on everything? Do you have 24/7 availability for applications? Do you have the ability for a pricing engine online so people can see exactly what interest rate they would get? And if you're doing risk-based pricing adjusters or LLPAs, does the pricing engine, build that in so that the person knows the exact rate based on their criteria before they even apply? Next slide. Have you done a review of your disclosure documents and your process to make sure your paperwork is streamlined and efficient? You'll see there's a picture there of 3 engines, and I think it's very, very good visual because Elon Musk, who is sending all these rocket ships up in space in 2016, his rocket ship looked like the engines on his rockets looked like it did on the left-hand side of that picture. That was the traditional way with which to build the rockets. Well, he got back and he kept saying to his team, you need to go back in and re-engineer and re-look and see how you can improve. And 4 years later, in 2020, they came up with the second picture, and they made something that was less weight, more efficient, actually put more thrust to be able to go up into space with less fuel, and they came up with that second model. And then 2 to 3 years later, he told the engineers to re-look at your thing again, re-look at your processes again, and he came up. And now that last picture is where SpaceX with Elon Musk is with their engine. So in a 8-year time frame, those 3 pictures have developed. And so I ask you, over the last 8 years, have you taken a look at your process, at your paperwork, at your disclosures, and have you really looked to see if there's ways with which to improve and to streamline and to make it much more efficient for that millennial to apply? And if you haven't, well, the independent mortgage bankers and the fintech companies and a lot of the big banks have, and that's why you somewhat fall behind. So you have to make sure that that you're constantly looking at your process and cleaning it up and improving on it. Now let's go to the next page. I think that the number one credit union strength in the mortgage market is that you can strategically use your portfolio to offer products and benefits that the independent mortgage bankers and the banks aren't willing to do to attract business and to attract more membership to your organization. So let's say, how do you do that? Well, the first item and first example, as Erica mentioned, that MSIC came up with a program called the Rate Improver Mortgage, the TRIM product, which is a portfolio product that you can market, and you can market to your communities that you're in, your realtor bases, in your branch, outside your branch, and you can say, hey, you come and you apply with our credit union, you'll get a very competitive 30-year fixed rate. And if the rates drop in the first 5 years, we'll let you float down the rate for free and get the new rate. And if you look out at the marketplace, the independent mortgage bankers aren't doing that. They can't do that because they need to sell all their loans. The banks aren't doing that, or if they are doing it at all, they're not marketing it, but they typically are not doing that. And in this environment right now, where the Feds have been talking about lowering rates and actually last week started to lower rates, the number one question that we see is when somebody applies, they say, can I refinance? Is there a prepayment penalty? And we answer that by saying, you can refinance at any time, but you're going to have to pay closing costs again, which can be, $4,000 to $6,000 in cost. So if you take this trim product and you take it with our institution, then you have the peace of mind that in the next 5 years, whenever you like the interest rate, you tell us and we'll change the rate to the current market and there'll be no cost for you to do it. Not only is there no cost, but there's no hassle. They don't have to provide any additional, pay stubs or credit reports or appraisals or anything along that nature. So you've made it easy and you're able to beat the independent mortgage bankers and banks at their own business and start to add millennials to your new membership base. Other things that you can do is you can make underwriting exceptions to loans that are normally written to Fannie or Freddie guidelines on deals that make sense if you want to keep it in your portfolio. Independent mortgage bankers can't do that. They want to sell the loan, so they have to make sure it meets all the agency guidelines. So if you're going to use your portfolio, you want to use your portfolio in which to attract clientele that can come in and say, wow, that's why I want to join that credit union. They're very, very consumer focused and they work with me and work with my situation. And a third example, extending rate locks. All the independent mortgage bankers, the banks out there, they'll give a typical lock length, say 45 or 60 days. And if you can't close within that time, then you may have to pay a fee or you may get the higher rate. Since you're putting some loans on your portfolio, you can make the decisions to make your member very happy and say, you know what, I'll give you an extra 10 days, I'll give you an extra 30 days at the same price as that you originally locked in. And that flexibility really is of value to the millennial and the mortgage community. So with that said, I would go to the next slide, which is the conclusion to say, really the best way to grow your membership is through the mortgage product. That's the entry. That's the key to entry at your institution. So I would recommend that everyone at the credit union, to encourage everyone who works at your credit union to market mortgages within and outside of the credit union. Within the credit union can be obviously with teller stands and posters and things like that. Outside the credit union, it's just word of mouth. It's just telling your friends, telling your family, telling people you meet that, hey, we got these great mortgage products. And example being the trim, you can get a free float down. It's worth joining. It's just worth joining and try to get your whole institution to sort of be behind marketing it rather than just having one or two people trying to market it. I would set up contests within the credit union to reward employees who help successfully drive mortgage volume to the credit union. It doesn't have to be just for a mortgage loan originator or just for certain staff. It's just figure out a way with which to reward your employee base for helping market mortgages throughout the entire community. And then lastly, I put here, you need to meet or exceed, beat the closing timeframes that are expected out there by your borrower and by the real estate community. And how do you do that? By using technology, having a knowledgeable staff, and using automation. So when a realtor refers a deal over and it's got a 30-day time frame to close, that you have the ability with which to meet those expectations, that you have a system in place and a process in place that says, okay, I can get from A to Z in this time frame, and I can meet what the marketplace is asking us to do. So those are ways with which to make yourself known, make your credit union known to the actual millennials who are out there in the home buying process right now. So I'll stop right there. Unfortunately, I'll have to rely on Erica to let me know if anybody has any questions. But that's the main focus of our three topics today.
Great, thank you, Jeff. That was great, and you were able to get that done pretty quickly, which is awesome. We did have 3 questions. Let me just take them in order. Actually, this is a double one. Can you still sign up for TRIM, and how long does the onboarding take?
Yes, you can still sign up for TRIM. The onboarding takes about 30 days with which to get you live. And that 30 days, just so everybody knows, is we do everything private label. We do everything in the credit union's name. The credit union still originates the loan, and then behind the scenes, we are the ones who disclose. We're the ones who process. We're the ones who make the underwriting recommendation to your institution. So we have to get your fees, your attorneys, your appraisers. We got them all set up so that we're using everyone that you would normally use, and we're doing it behind the scenes. And that's that 30-day window. But yes, you can still sign up for TRIM. We think it will be an active product for a long time in the future. Interest rates when we started thinking about TRIM were in the 7 to 7.5% range. Now some people are even below 6% on a 30-year fixed. Our current TRIM rate is at 6% right now. So it's a very attractive start rate, and I think it will be a worthwhile product to offer to your community and try to bring in new members.
Okay, this one is just a comment, which we appreciate, saying that they did see TRIM advertised in their local paper, so the word is definitely out there, which is great feedback. Thanks for letting us know. We have done a broad marketing campaign across Massachusetts, so we're happy to know that you are seeing that. Your local paper, the MBTA, online. We have tried to cover all the bases for advertising, so we do hope that your consumers are seeing it. So that's great feedback. Thank you for that. And if anyone else has any more questions, this is a great time to ask. The slide deck that Jeff went through today will be available upon request, and then this recording will be available sometime early next week, so you can share it with your staff and with your teams. But Jeff, I don't see any further questions. Oh, how do we get started? How do we get started with TRIM? So the best thing to do would be to reach out to myself or Jeff. Jeff is the better person to reach out to. His email is jlipes@msic.org, or you can give me a call. You can call MSIC directly, but Jeff is the best person to start with. He can answer all the questions, provide all the documentation, and he gets the ball rolling, but we're all here to support you. So I have your information, and I can put Jeff in touch with you. And Jeff, anything else that we should add in? I was just going to say that you're going to continue to see more information about TRIM. Like Jeff said, this is a program we expect to be around for a long time. Like someone just mentioned, you're going to see it in your local advertising space where you continue to be really excited about the program and pushing it. And we do have another webinar coming up in the next month or so. It's going to be items every credit union should have in their strategic plan. So keep an eye out for that. As we always say, these webinars and training sessions are free to our MSIC members, so we encourage you to take advantage. And I think I don't see any other questions. So Jeff, I'll put you in touch with this person who inquired. And thank you so much. It was an awesome presentation. I will ask you, we will distribute that to people who we have a couple of requests. And that's it. Thank you everyone for being here today. And we will see you soon.
Thank you, Erica.
Thanks. Bye-bye.